Good morning, traders. This is Michael coming to you from GammaEdge on Wednesday, April 9th with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. We're currently looking at our market trend model. This market trend model is based on the tick index. You can look that up on any of your Investopedia or any other financial websites. Basically, it is just a measure of buying versus selling transactions within the overall market. And then we put a time component on it to measure the trend of the overall market to be able to see who is in control and who is winning the battle in buying versus selling. Our bolded white line here is our instantaneous CT. It's just an aggregate cumulative tick of the buyers versus sellers. And as you can see, for the past multiple days, we've had a significant downtrend, indicating that sellers are maintaining control of the overall market over buyers. The longer term ribbon that we have here is a look back period for positioning of longer term. Obviously, the red below cyan and a negative slope continuing indicates that sellers are still in control of the overall market. Up here, we have a breadth indicator, new highs versus new lows. Again, pretty stagnant throughout most of the day yesterday, but then again, new lows started ticking up above new highs, indicating more stocks are being sold than bought. And then if you look back multiple days, obviously the new lows continue to increase in the overall market, also putting pressure, and then price depreciation as more stocks are being sold than accumulated or being bought. This is our filtered cumulative tick here. This is filtered out to larger transactions, most likely institutional transactions or larger market participants via plus 1,000 or minus 1,000 large block order transactions. Again, stagnant for the early part of the day, but then we saw significant selling come in at the end of the part of the day in the afternoon session, indicating that a significant amount of selling large orders were transacting and taking place. And then our cumulative tick here through the day again was continued to the downside, indicating that sellers were in control. So takeaway for this short market trend model is basically sellers are in complete control of the overall market. If you are a bull, you'd want to see this bolded CT right here at least stabilize and flatten out, and then start to turn back to the upside, crossing these shorter term moving averages, indicating that buyers are trying to take control. Again, this could be a short term move back to the upside that would be met with continued selling, as we've saw previous days before when we reach the colored ribbon, which historically is an area where we see some stalling or possible failure, and then turn back to the downside. So nothing bullish to take away from here at the moment. Again, with the overall volatility in the market, we could have snapback rallies that can be vicious, but then can also be met with selling and fail, and then lead to new lows in the overall market. So we'll continue to watch this day over day as well as intraday to see if we do see any stabilization or possible turn back to the upside. Moving on to the SPXA, we call this the cruise ship because this is larger institutional money positioning, again noted by the expiries that are monthly expiries. Again, put dominated within the overall complex, so really nothing to say here. Put speculators maintain complete control. Implied open at this moment is around 4,900. Possibly up towards 4,950, again significantly below our closing price of yesterday, and well below the transition level that is outlined here that we would at least need to see spot price start to move into or above for any sort of sustained price appreciation. Again, noting that we have significant in-the-money puts overhead. As we saw yesterday, we gapped right into those in-the-money puts overhead and then failed pretty quickly, and then resulted in increased selling and new lows within the overall market. So the 5,000 level above is a significant area that we'll be watching if we do see price appreciation toward that level for some sort of stalling or reaction if we get to that area. Moving on to the SPXP. This basically is what we call the cigarette boat. This is shorter term contracts noted by the daily, weekly, and monthly expiries up here. The contracts turn over more quickly within the SPXP, so that's why we like to reference it. Again, denoting we're put dominated, so put speculators are in complete control. Expected move is extremely outsized, 287 points. So again, high volatility, high ranges, as we saw yesterday within the overall complex. Difficult to trade at the edges unless you have a significant edge or defined edge. So it is, again, to our members, as well as other traders' advice to take smaller time frame, very short term, smaller positions. And if you must trade, risk management is the utmost priority, or just sit on the sidelines and wait till the structure to completely repair itself. As you can see, we do have significant in the money puts overhead, still controlling the complex as put speculators are in control. Again, 4,900 and 4,950 will be key levels as we look towards the open, and then obviously 5,000 up here, a very large level with significant amount of negative net delta, and puts sitting at that level, which could be a stalling area if we do reach up into that level. As we saw yesterday when we got below 5,100, and then 5,000 resulted in increased selling to the downside. So we'll continue to watch those key levels above that are put dominated for stalling and price reaction. Moving on to the SPX P0 DTE, as indicated here, again, put dominated, again, expected move extremely outsized. 4,950, if we do open somewhere around that level, will be a key level denoted by the significant amount of put OI dominated here versus call OI, so a large amount of negative net delta sitting there. Implications are if we do move above that and change that negative net delta to out of the money, those would be out of the money puts as they are in the money if spot price is below it. This could become some sort of supportive type action, as you do see in the money calls below us as of now. What we'll be watching intraday is our vol M command. That is the volume of options transacted within the overall day, and we aggregate those and find the centroid, which is the central point and the mass of the most volume. So again, if we do see put speculators come into the overall complex, would be watching the vol M command and looking for a negative slope in the puts, indicating that put speculators are transacting out of the money puts to the downside, speculating that we will see more price depreciation. To the upside, we will be gapping below transition. If you followed us any at all, understanding that transition is an area that you must get above if you want to see any price appreciation, which changes this put dominated structure to a more favorable or balanced structure, or even to a call dominated structure. Again, noting that the overhead structure is completely put dominated, so price appreciation will be difficult to the upside. As we saw yesterday, we had outlined those levels pretty adamantly pre-market that we would most likely see some stalling right where we are gapping into, and then failure at those overhead levels, resulting in continued selling as out of the money put speculators came in very, very quickly, speculating to the downside on price depreciation. So moving on to the GEX ratio, this is obviously a better put call ratio. This is a short dated call gamma versus put gamma, and we add a time component obviously to it, indicating that we are still significantly below and pegged down below the 1 level that we like to look at, and in 0.5, indicating that short dated put gamma is outpacing call gamma by a significant margin. So we did not see any price or any GEX ratio improvement, which would have been call speculation versus put speculation when we saw price appreciation the previous day. So just indicating basically that put speculators are still maintaining complete control of the overall market. So we'll continue to watch this day over day to see if we see any improvement that call speculators are trying to step in and at least exert some sort of force, possibly for a quick move back to the upside. Moving on to the the delta balance for the SPX. This is basically just showing us what is occurring above and below spot price with reference to the option structure. Again, nothing really going here, noting that the red, green, and blue lines are at 0 or below 0, and noting the delta balance, which is our blue line, is -1, indicating that put speculators are in complete control above and below spot price. What we would need to see is a short-term improvement, at least on the left-hand plane, which would be your red dotted line here, indicating that we are seeing some abatement or not a significant amount of put speculation to the downside occurring, and then exposing some of those in the money calls below us that can be supportive. And then resultant, you would want to see the green line here, which is our right-hand plane. You would want to see this start to transverse towards up above the zero line, indicating that those in the money puts above us are taking some profit, and there are some out of the money call speculation coming in to the overall structure. So takeaway is delta balance is still pegged at -1. Put speculators are in complete control. We would need to see this improve dramatically to have any sustainable price appreciation to the upside. Moving on to our net stack command, this is basically just indicating the highest sensitivity levels above and below spot price, with the reference to the Greeks, definitely noting the first order Greeks are most important, which is the delta, indicating that we have basically 10x in the money puts overhead. This is the highest sensitivity strike at 51.25, which obviously is well above where we're at spot price. Denoting we have small in the money calls below us. This has been indicating each day that this really is not a sustainable area to maintain some sort of bounce, as put speculators continue to just overrun with deltas. So opening those out of the money put contracts swamps these small in the money calls with positive delta below us. But do noting 48.70 to the downside would be that first level. We be watching for some sort of price reaction or a bounce. And then we'll be referencing our intraday commands, vol-m and vol-d, as well as our net stack commands, to see if there's any structural change whatsoever and how market participants are speculating either to the upside, downside, or sideways. So moving into the basically our thesis for today. Thesis is heading into the open. 49.50 is going to be a very important level. We see 5,000 above us. All of the GEX levels and delta levels are stacked at that 5,000. So at the very least, we'd need to get above 5,000 to have really any change of the overall structure, at least in a very short term. Again, noting that long term, the structure is still very broken and put dominated. To the downside, we'll be watching that 48.70, indicated that with the net stack command this morning already, that was an area that had small in the money positive delta. That could be an area where we bounced, which we saw that pre-market already. So again, if we take out that 48.70 and then we see put speculators speculating to the downside via our vol-m command, that we would anticipate further weakness to the downside. So takeaway is structure is still extremely broken. Volatility in vol is extremely high still. We are going to see outsized moves within the overall price of the SPX. So smaller time frames, smaller positions, and risk management is the utmost importance. And if you're really not familiar with trading 0 DTE or this type of volatility, we do encourage people to stay in cash, sit on the sidelines, wait for the structure to improve, wait for you to have tradable edges around transition levels that we like to define, and key gamma delta levels that give you the best risk management and risk reward. So with that, make it a great day. Hope everybody does well trading today. And again, just encourage everybody to manage risk appropriately. Thanks.